Why doing nothing is the hardest and most profitable investment skill. The most profitable action in investing often looks like no action at all. And that's exactly why almost no one can do it. People think investing is about intelligence, about analysis, about timing, about skill. But the real separator isn't what you do, it's what you don't do. Doing nothing sounds easy. It isn't. In fact, for the human brain, it's one of the hardest behaviors to sustain. Let's start with the discomfort. When you invest, you hand control to time. You commit money. You accept uncertainty. And then you wait. Waiting without feedback feels wrong. Every instinct says check, adjust, fix, react. The brain equates movement with safety. Stillness feels dangerous. Now let's talk about action bias. Action bias is the brain's tendency to prefer action over inaction, even when action is harmful. Because action creates relief. It feels productive. It feels responsible. It feels like control. Doing nothing offers no immediate relief, only delayed reward. And the brain hates delay. Now let's talk about emotional noise. Markets generate constant stimulation. News, charts, predictions, opinions. Each signal triggers interpretation. Is this important? Should I act? Am I missing something? This constant stimulation creates anxiety, and anxiety demands action. Doing nothing means sitting inside that anxiety without responding. That's hard. Now let's talk about identity again. People want to feel competent. Investing competence is often mistaken for activity. Rebalancing, tweaking, optimizing, reacting. Stillness doesn't feel competent. It feels passive, lazy, naive. But stillness is not passivity. It's restraint. And restraint is a skill. Now let's talk about time mismatch. Investing rewards long time horizons. Human psychology operates on short ones. This mismatch creates friction. You invest for decades, but feel outcomes daily. Daily feedback magnifies noise. Noise triggers emotion. Emotion triggers action. Doing nothing requires zooming out mentally, again and again. Now let's talk about regret. People fear regret more than loss. What if I should have acted? What if I missed something? What if this was obvious in hindsight? This fear pushes intervention, but most regret in investing comes not from doing nothing, but from doing too much. Selling early, chasing performance, abandoning systems. Stillness avoids many irreversible mistakes. Now let's talk about effort illusion. People assume effort improves outcomes. In investing, effort often reduces them. More effort increases trading. More trading increases fees. More fees reduce returns. More decisions increase error. The paradox is brutal. The harder you try, the worse you often perform. Doing nothing protects you from yourself. Now let's talk about boredom. Long-term investing is boring. That's not a flaw. It's a feature. Boredom signals stability. But boredom makes people uncomfortable. So they inject excitement. They chase trends. They seek stimulation. Excitement is expensive. Boredom compounds. Now let's talk about the professionals. Some of the best performing investors in history didn't trade often. They waited. They held. They ignored noise. Not because they lacked insight, because they understood psychology. They knew the hardest part wasn't knowing what to buy, it was knowing when not to touch it. Now let's talk about structure. Doing nothing successfully requires structure. Rules that prevent interference, automation that removes temptation, distance from constant updates, limited exposure to noise. Doing nothing is not accidental. It's engineered. Now let's talk about emotional tolerance. Doing nothing requires tolerating uncertainty, volatility, temporary losses, missed opportunities, boredom. These sensations never disappear. They become manageable with repetition. Time builds tolerance. Now, let's talk about trust. Trust in the system. Trust in probability. Trust in time. Trust is built by staying invested long enough to see recovery. People who panic early never build trust. People who stay build confidence quietly. Now let's talk about the invisible compounding. While nothing seems to be happening, dividends reinvest. Growth accumulates. Time multiplies effort. Progress is invisible until it isn't. This invisibility is what tests patience. Now let's talk about the final truth. Doing nothing is not laziness. It's discipline without drama. It's choosing long-term outcomes over short-term relief. It's letting time work instead of trying to outsmart it. That's why it's so rare, and that's why it's so profitable. The market doesn't reward intelligence alone. It doesn't reward effort alone. It doesn't reward confidence alone. It rewards consistency. And consistency often looks like doing nothing. Not forever, not blindly, but long enough. So if investing feels emotionally hard, that doesn't mean you're bad at it. It means you're confronting the hardest skill involved, the ability to wait. And the people who master waiting don't look impressive day to day. They look boring until years pass, and suddenly the results speak for themselves. Quietly, without drama, without constant action, without anxiety, just time doing its work. There's another reason doing nothing is so difficult. Doing nothing removes the illusion of agency. When you act, you feel involved. When you intervene, you feel important. When you adjust, you feel responsible. Doing nothing feels like disappearing. And for many people, that feels threatening because involvement is tied to self-worth. If you're not doing, are you still competent? If you're not reacting, are you still responsible? If you're not optimizing, are you still intelligent? This is the quiet ego trap behind investing. People don't just want returns, they want to feel smart while getting them. Doing nothing denies that feeling. It offers no applause, no feedback, no confirmation, just silence. And silence is uncomfortable for a brain addicted to stimulation. Now let's talk about narrative closure. Humans crave closure. We want clear beginnings, middles, and endings. Investing offers none of that. Positions stay open. Outcomes evolve. Stories remain unfinished for years. Doing nothing means living inside unfinished narratives. That's psychologically taxing, so people close narratives prematurely. They sell. They switch. They lock in outcomes. Closure feels relieving, but relief often comes at the cost of compounding. Now let's talk about anxiety transmutation. When you do nothing, anxiety doesn't disappear. It changes form. Instead of "what if I lose?" it becomes "what if I miss out?" Instead of "what if this goes down?" it becomes "what if I should be doing something?" This is why inaction anxiety feels different from loss anxiety. It's quieter, more nagging, less dramatic, and because it's subtle, people obey it more easily. They mistake discomfort for insight. Now let's talk about false urgency. Markets manufacture urgency constantly. Breaking news, sharp moves, predictions framed as deadlines. Urgency hijacks rational thought. Doing nothing requires resisting urgency that feels legitimate. This is exhausting, but here's the truth. Most urgency in markets is artificial. Compounding doesn't care about headlines. It doesn't care about short-term moves. It doesn't care about daily narratives. It cares about time. Now let's talk about control again, but deeper. People believe doing nothing means giving up control. It doesn't. It means relocating control. From moment-to-moment decisions to system design. You don't control outcomes. You control exposure. You control how much you invest, how often you invest, how diversified you are, how automated the process is, how insulated you are from noise. Once those are set, intervention adds little value. Doing nothing isn't surrender. It's respecting what you can't control. Now let's talk about emotional maturity. Doing nothing requires emotional maturity. The ability to sit with discomfort without reacting. The ability to tolerate uncertainty without seeking relief. The ability to let results unfold without micromanaging. This maturity isn't taught. It's learned through repetition, through staying invested during downturns, through not touching portfolios during volatility, through watching fear pass without obeying it. Each time you don't act, capacity increases. Now let's talk about how people misinterpret success. People assume great investors are decisive. They are, but their decisiveness happens rarely. They decide once, then they let the decision play out. Most people decide every day, every fluctuation, every headline. That's not decisiveness, that's reactivity. Now let's talk about the invisible asymmetry. The cost of action is immediate. The cost of inaction is delayed. So the brain overweights action. You feel the relief now. The regret comes later. Doing nothing flips that. Discomfort now. Reward later. The brain resists this inversion. But this inversion is where compounding lives. Now let's talk about trust again. Trust is built by staying, not by predicting, not by timing, not by reacting, by staying through discomfort. Every cycle survived builds trust. Every recovery witnessed strengthens belief. Belief reduces anxiety. Reduced anxiety improves behavior. This is how psychology compounds alongside money. Now let's talk about the quiet truth most people never hear. The biggest investing mistakes are not made in panic. They're made in restlessness, boredom, impatience, the feeling that nothing is happening, so people interfere. They break what was working. Doing nothing requires faith and slowness. Now let's talk about the hardest part. You never know in the moment that doing nothing was the right move. You only know in hindsight. This lack of immediate validation is brutal, and yet unavoidable. Now let's talk about freedom. True investing freedom is not freedom from volatility. It's freedom from needing to respond to it. When you reach that state, investing stops being emotional labor. It becomes background infrastructure. Quiet, predictable, boring. And boring is powerful. Now let's close with the deepest realization. Doing nothing is not an absence of skill. It is the culmination of many skills: understanding probability, designing systems, managing emotion, trusting time. That's why it's rare, and that's why it works. Most people can't wait. They can't sit. They can't tolerate uncertainty, so they trade peace for action and action for relief. The few who learn to wait, who learn to do nothing, who learn to let time breathe. They don't look impressive in the moment, but years later, their results feel almost unfair, not because they were smarter, because they were calmer. And calm is one of the most underpriced advantages in investing.